Hey, what's going on everyone? CryptoVatsik here with another technical analysis video for you. Today I'm going to be covering GRT, the graph, and as always, nothing of what you're about to see is considered financial advice as they are just my opinions. But if you do enjoy this content, please like and subscribe to the channel. Okay, you guys, it's been about 7 months since my last video on GRT, and so much has transpired since that past video. It's been really exciting and awesome to see. But essentially, the graph has confirmed the bull run has started because we have finally broken out of that bear market ceiling that I've talked about. And yes, I know many of you might be saying, yeah, sure, we already knew the bull market was here. It's been here for some time. That is true. And that's why I talked about our higher low in my past video as that first trigger of confirmation, where we had made our bottom. We put in our higher low, or second bottom, if you will. We reclaimed this macro range equilibrium here from our range high over here, and not to our swing low, but just down to our higher low here as an ultimate macro range, where price reclaimed that EQ here, signaling strength and demand until we got that supply pinch recently. And on account when we did that, we broke our bear market ceiling, which I've talked about many times in other videos. Essentially that major resistance or that prolonged resistance level that short squeezes will usually get rejected at, and even decent rallies will get rejected at. However, we have now broken that level with clear confidence, and we are coming up to my next area of interest, which is this macro point of breakdown here that stems from the point of breakdown we had in this region here of consolidation. And that is our next major objective, in my opinion, is a reclaim of that zone. And I expected price to shoot up here once we broke that bear market ceiling. And just really quickly to explain what I mean, I'll just play a quick snippet from that other video. Okay guys, here's the other video. I'm just going to play it for a minute and then we'll come right back. But all in all, I do think that we're eventually going to print what is a higher low, zoomed out macro sense here. Like I said, if I think that this is our bottom, then I think we are working on a higher low, which doesn't have to look like that. It could still look sloppy and stagnant and slow and boring, and then we reclaim that yellow over here, with this being our higher low in comparison to our bottom here, okay? So I do think we're working on something like that to get out of the bear market, but it's important to remember that we're not out of it yet, and it could take some more time, but I do think that we are working on a higher low here. So, okay guys, that's enough of that. Back to the chart here, and essentially here is that higher low that I wanted to see, okay? I talked about our bottom and then getting that higher low. Very straightforward, but was a major trigger to this rally. And then as I said, once we got that secondary low confirmed, we were able to form this macro range here in the blue. And again, I always talk about a reclaim of those equilibriums, which happened right in this yellow box here. We actually pushed the range high first, and then ultimately coming down and testing that equilibrium with acceptance. So all really great things to see. And ultimately, as I said, that bear market ceiling here that sat at about 21 cents, well, price sliced right through it. So what does that mean from a macro sense now, just looking at this chart? Well, if I stick to my analysis and my thesis from prior videos, it's that GRT is going to have a really successful bull run, but there is going to be resistance on the way. And the next in line that I had shared with you is this major point of breakdown here in red. And we have not actually traded inside of that zone yet. So we may see price continue to push from this ascending channel that we've got here, okay? It does look like this structure is building up for an explosive move, in my opinion. I think this is very bullish price action, and if we can maintain the upper quadrant of this channel high and its EQ, then I think we start to get a next major leg, and that major leg taking us into our zone of resistance here. And I know this is quite a large zone to work with, so I'm not using this zone as kind of a sell target, because again, you got to remember, I'm looking at the macro. And so when you look at the macro, you're not so concerned with candle breakdowns or temporary resistance. I'm concerned with this consolidation that we had back here, okay, in 2022. This is how large that zone was, where price ranged and consolidated for some time until it capitulated from that range. So that is why that zone is so large, and that is also why on the lower time frame price could push up and dance around in that zone and even deviate until it ultimately rejects. So from a macro sense, I expect a rejection most likely as the next probable zone for a rejection, providing a decent opportunity to look for longs before the next leg. So if we do in fact get that push into red, price looking pretty healthy right now. Say we get a breakout of this upper band of the ascending channel, and that's enough to push us up into red. We could get an explosive move to the upside until we ultimately get rejected. And then from there, we'll just have to reevaluate. But ultimately, that's what I'm looking at in a macro sense. Lower time frame, it looks very bullish, very shallow retracements, so it's difficult to jump on. And it doesn't mean we have to have a major correction off of red. We could have a pretty brief and pretty shallow correction, to be honest. We could ultimately just end up correcting back down towards this consolidation of price until we break bearish market structure, and then it's the next leg where this is the next dip opportunity. So, it's just how it's going to play out. This is kind of the most realistic, most probable scenario that I'm leaning towards. There are other scenarios where it can slice right through resistance, just as we saw with the bear market ceiling here, at 21 cents, pretty much sliced right through it with brief corrections thereafter, but ultimately grinding up, making higher highs and higher lows. So if this happens quicker than anticipated, or after this does take place, the next area of resistance that I am looking at, the next in line macro resistance essentially, is up here in red, just above it. And that is a major level to work with, so that comes from this entire bear market base that we set throughout here, from basically May to July through September, and then again all the way up to the new year, until that zone was lost and then became our clear resistance. So it's just kind of the next probable area of resistance in my mind, zooming out and looking at this. And these are two major areas to get past, and we all know that there's going to be corrections on the way up. So I do expect GRT to be successful and get past these areas, but I'm also really interested to know when the next opportunity is going to be, or when the next macro correction is going to be, or likely take place at. Because I want to most likely take some off the table, reduce risk, sell some positions, and then simultaneously I want to get ready to load back up for the next leg up. So anyways, those are the next two resistance areas I'm looking at. As I said, above that, we've got another couple areas, clearly just an area of support throughout this time until an area of resistance, obviously at $1.30 with these two above. But once we start getting up to those prices, we won't be looking back. But for now, let's focus on this. So as I said, we've broken out of this macro range in blue. We've made a higher low off of the bottom. We reclaimed the range EQ, signaling continuation. And more recently now, on these two last weekly candles, an explosive move by GRT to break our bear market ceiling. So massively powerful move, filling in some of this inefficiency in price that we had here, so not a lot of real resistance testing it yet. And that's where I think that this point of breakdown zone in red will come into play pretty soon. But very bullish chart. We are coming up to the 100 EMA here in the following gray line, so that is definitely something I'm interested in flipping on the high time frame. Let's check it out on the daily, well above it clearly on the daily with the recent expansive move. But I think that the key thing here is last time when we exploded above that EMA, it was the first time on the daily that GRT had traded above the EMA since we lost it, way back here. Basically since back November 2021, unless you count this little peak. But point is that we traded above it, and we weren't able to maintain it. Clearly all throughout here, we lost it and it was resistance. So the key thing here that I'm seeing is that we have now traded above it with a successful retest, as in it's a successful acceptance of support. And now we're well beyond it at this point. So the further price moves away from the EMA, the harsher the reaction you might expect, kind of similar to back here where price moved quite expansively far away from the EMA. On this short squeeze, we had quite the rejection, we had quite the correction, and basically mean reverted back down. This move on the next one was, a little bit less explosive, more of a grindy, choppy structure to come up to the range high in a slower manner. And so that was enough, built up strength to provide a successful retest of the EQ, of the EMA, and of course, just it was time in the market where altcoins were, going to flourish. But now we've put in quite the gap again since on this most recent leg. So if we look at the EMA, do something like that, I would expect, as I said, a rejection even the further away we move from it, from somewhere in red, and then ultimately coming back down and testing either the EMA or some sort of consolidation on the way up for, that more of a macro correction. So I'm not certain how it's going to look yet. Nobody can be certain, but I am looking at our red zone here as an area of interest. But I do expect GRT to be successful, as I said, during this bull run. So even if we get these nasty corrections, that could be, 20-30%, especially on altcoins. You got to be really careful with these dips and manage your risk safely, because shortly after, I do expect price to reclaim certain levels and continue that push and explosiveness up to our next resistance. And this is where the FOMO kicks in. This is where people use bad risk management. Whereas if you've been able to accumulate somewhere down in these lows, you're sitting comfortable, you're sitting relaxed, stress-free. If you were not able to accumulate down in these lows, then my suggestion would be to do what I am currently doing. Because even though I've accumulated at the bottom and at this higher low, of course it's not enough for me. So I'm still accumulating more. I'm dollar cost averaging in on essentially every little dip that we get. So I DCA'd more in this dip here. I don't think it was the exact bottom, but it was somewhere within that region or that yellow box on a reclaim of that EQ. And then now I'm basically sitting on my hands because I don't see a macro correction yet. So I'll let price expand up, and then I'll just be looking for essentially that next major correction somewhere in green. But of course, remembering that green might actually be up here. We might in fact flip red right off the bat. If price does shoot up and flip that level, this might be our next area, leaving all this area here in air, essentially just avoided space. So that's why I say you got to kind of monitor it, manage your emotions, don't expect it to go one way or the other. But I will be DCAing in on every opportunity essentially until all-time highs on this one, potentially with some trades as well along the way in those resistance areas, taking some risk off the table, but not unloading those long-term positions. And then basically just doing exactly what we've got here again once we reach our next area of resistance up here in 55, 56 territory. The one thing I will note is that we haven't really had a macro retest of that bear market ceiling as of yet. So if you start to look at price, on lower time frame, even on lower time frame, we really haven't had a macro test of that bear market ceiling at 21 cents. We basically sliced right through it and almost immediately formed this steep ascending channel. So very bullish, but remembering that we haven't really seen a retest of that level yet. And it's fine. It doesn't have to happen. It's not a guarantee that we get it. But if we are going to reject off of red somewhere, kind of the most notable zone to be retesting would be that bear market ceiling, the major breakout area that we just broke out of. So to me, it would make sense just looking at the price structure right now and how bullish it is. I'm not certain we get it. Maybe we fall just shy of it and front run, leaving orders down here, sidelined. So it's just a matter of how it's going to play. My resistance areas, which are essentially targets, even though they're large zones, the structure that I'm looking for, what I'm waiting for. And those key triggers, wait for a new range to form, wait for that high to form, bring it down to the low, and then just start trading it within that next range, you guys. You can trade it from the lows to the highs, or if you're looking long term, you can wait for that confirmation of a EQ reclaim, signaling continuation, just as we got back down here, in the previous macro range. Got that equilibrium reclaim. But even if you're dollar cost averaging in, you want to be doing it on dips, not on the rips. That's it for today's video, you guys. Thank you so much for joining. I hope you took something away from this video today. And if you did, don't forget to like and subscribe to the channel, and we'll see you next time. Peace.